Hello traders, hello everyone, my name is Grega and welcome to a new video on cryptocurrencies. Now I will give you an update on Ethereum, also a quick look at Bitcoin dominance, Bitcoin itself, and also a quick look at the S&P 500. Now the last time I talked about cryptocurrencies was this idea that we shared on the Ethereum. We were identifying this as a 5-wave reversal away from August highs, from summer highs, and said that more weakness could occur after 3-wave recovery. So I will give you an update on this one. And of course, we look at the others as well to show you some higher degree charts, especially on Bitcoin. So we have seen that recovery on the Ethereum. Now here is the updated version. You can see the very nice 5 waves drop that we identified back then, and then a 3-wave recovery back into the area of a former wave 4. And what is important for the near-term price action is that actually Ethereum is breaking this trendline support. So I really would not be surprised if we can see even a retest the 61 or 78.6% in the next few sessions. However, the whole crypto market is not doing well. Of course, it has a lot to do with the risk of flows. As you know, US dollar is also trading significantly higher because of hawkish Fed. Paul even admitted that they know that high rates will hurt the economy, meaning that they are ready even for some bad jobs in upcoming months. And of course, this is not supportive for the market. So even if we see maybe bad data week after week, you will and if this will lead towards the recession, well, and even if Fed will have to stop, will be forced to stop being hawkish, still, I mean, recessions and bad data is not good for the economy either. So I'm afraid that stocks could see more weakness, and this could drive cryptocurrencies even lower. So Ethereum, however, still could be maybe could survive this invalidation level at $1,880. So as long as this is in place, there is still a valid scenario that Ethereum would rally. But even this one, even if it's in a new bullish turn, you still need the wave C to complete this counter trend movement, and then you should see a bounce from, let's say, 61, 78.6%. So from a trading perspective, what I would have to see, well, I would have to see firstly wave C moving into this area, and then I want to see the response from the market in that zone. If we will see a 5-wave rise, something like that, then of course buying a pullback makes sense. But if market will just move straight to the downside, then of course be aware that there can be more weakness coming. So I would not be buying just the next dip. I would most likely wait on the next impulsive recovery first. But Ethereum, why I'm bringing on Ethereum, because it has done much better compared to the Bitcoin or maybe any other well-known cryptocurrency. So Ethereum will probably be on my first list whenever we will see or identify bottom on the cryptocurrency. So for now, however, as I said, even wave C here is still missing. So be aware of more weakness. Now, if we look at the Bitcoin dominance, this one also still not ready to be back in play on the bull side, so that Bitcoin would be again very attractive. I think that still this is the bearish sequence that is incomplete, potentially even a triangle here in a wave 4. Even cyclical approach suggests that if you compare the previous drop in time, well, it suggests that there could be still more weakness within current bearish cycle, and potentially even a retest of these 2017 levels. So back once we get this to that area, that's when again I think that Bitcoin could be very, very attractive. Now, if we go and look at the Bitcoin itself, at the wave structure, well, it's making an ABC drop, moving into this multi-year support zone looking back from the to the previous swing high. So this is quite attractive, interesting zone. But if you'll try to catch this bottom with some intraday setups, I believe that you will fail. So just be aware that there can be still new lows coming, potentially even 15,000 before market may stabilize. So what is very important, maybe for if you're a short-term trader, is again like on the Ethereum, that you wait on a 5-wave rise. So you want to see the response on the from the market. Whenever I identify this potential support, is not the support until the market and the price itself confirms that this is a support. And the only thing, the only way to figure this out if the support holds is that you see a price to respond away from that support, because you will know that then probably a lot of orders were triggered down there, maybe some buy orders, some volume will increase, and you see a push to the upside on price, and that's when you could join this rally. Okay, so until then I still would just observe the price action based on the intraday setups. But from a longer term perspective, I still think that later this year, in 2023, this cycle could come to an end. But we have to see what again will happen with the US dollar. What will be the Fed policy by the end of this year? Maybe this hawkish policy will come to an end. So we will see how this will unfold. Now, what is interesting is that this current pullback, I'm trying to compare it with the previous one here that we had back in 2019. Well, it's quite similar here, but still we are not seeing a reversal to the upside or confirmation. Now, if you're watching some of our past analyses and videos, I said that the real confirmation back here was when the price recovered and moved up beyond the previous swing low, which was at 63.27, around there. So here 6,300, of course, around there. So here with the same scenario, of course, you want to see a rally back above 33,000. Okay, so of course this confirmation hasn't been seen. That's why we just have to respect what the market is doing and just maybe potential wait on a new low and the next rally, which if will be impulsive could be quite interesting. Now another very interesting wave count could be that even if this drop, if I delete this for a second, even if this drop is going to be impulsive and not in three waves like I showed you on the earlier wave count, let's say that this is going to be a 5-wave drop, okay, and you're now going to see a move down into wave 5. Well, it's still, there are still very similar supports that we should pay attention on. There is a 2019 swing high, and keep in mind that after every 5 waves down or even 5 waves up, we know that market makes a 3-wave setback. Okay, so this is how market dynamics works. It moves in one direction with very sharply, very impulsively. Normally this is visible with 5 subwaves, but then, as you know, market will see a pause, and this will happen or unfold in 3 waves. So even in this bearish sequence, at some point you should see a 3-wave, sorry, that's not a 3-wave, but this will be a 3-wave recovery. Okay, so this is something that we would expect even in the most aggressive bearish scenario. Okay, so I still think that as I said earlier, think that maybe later this year, maybe in 2023, we could see this coming into the potential support. However, as I said, these cryptocurrencies are linked to US dollar, and everything depends on what Fed is doing, what the stocks are doing. So for now, the stocks are in risk-off mode, and if we can break this trend line here on the S&P 500, I believe that we are headed lower into wave C. And looking at the fear known as VIX index, looking at the VIX known as a fear index, also has a plenty of room here to move to the upper side of the range before we see fear moving into the extremes, and that's when you will have a lot of pessimism, and that's when actually stocks could potentially move towards the support. So we'll see if this will play out. If not, if just we will remain choppy here. Triangle is also one potential scenario here, but maybe a little bit too soon to call this one as a triangle because we don't have enough of swing high, swing lows to make this valid formation. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and if you like it, please leave me a commentary below this video. Bye.